Hello and welcome to the Friday wrap-up presented by the Gokhstein News Network. I'm your host, Landy, and today is November 14th, 2025, and Bitcoin has broken down from the weekly higher low. Now, granted, it had already broken down from one of the weekly higher lows, and it's broken down from the next weekly higher low at 98 to 101, and is on the move towards the next big weekly zone. And we're going to discuss a little bit about what the bulls could potentially do by Sunday, but it's an if. If they can do this, then they have a chance to turn things around potentially. But even then, they got a lot of work to do if they were going to do that. Very downside angled at the moment, including the early indications before the weekly close that if we close below 101 and especially lose the last higher low swing, which is going to be 98 to 25 here, that, well, we're already seeing the move down, much as I talked about on Wednesday and Monday and Friday and Wednesday and Monday of last week, that the next big area was, of course, on the daily to the downside, 94 to 96. So far, we have seen 93,951, essentially $94,000 to 96 in the lower term timeframes. So we have hit that area around the main point of control, which was more on the $96,000 side of things. But we have seen, Bitcoin try to move down to hit that big weekly level, which is the next weekly higher low. Bitcoin is below all of the highs, of course, and now below all of the previous higher lows. So the next big area to go to is the next higher low at 93.5 with the swing low at $89,000. And then if it does breach below there, where we see a lower high on the weekly coming in, then we'd be looking down to another lower high in this case on a close open at $86,000 or so. Now, I've talked about this for quite some time. Since Bitcoin's been up at the highs here after breaching 112, and then the big weekly zone up here being the 109 to 112 area, it did give itself some room with a higher low at 107 to, well, in this case, 107,250 to 108,250. You can call it 107 to 108, which is a daily level of interest from back here, which was on the breakout candle to the top side where Bitcoin was consolidating at a daily. It set a weekly higher low there. Well, we've lost that area already. That's going to become a very important area if Bitcoin can do a few very specific things. But right now, it's looking like expansion to the downside unless the Bitcoin bulls can start closing back above at minimum. So there's two criteria for downside expansion, right? And we've already seen the initial downside expansion on the daily, but for it to follow through with confirmed downside expansion on the weekly, we would need to see a close below the lower second, which is at 101, which is the weekly, this weekly higher low close right here. And we would need to see at minimum Bitcoin holding on to the 98,225 level or $98,000 level here, preferably for the bulls to prevent that actual downside expansion look. For expansion purposes on the weekly, they'd want to see closes back above 101. So pretty simple. Right now, we've already, fulfilled many of the downside targets on the initial move for the daily, which we're going to go look at in just a moment here. But this is very important to understand is now we have a trend break for the weekly, right? We already had a swing trend break, but now we have a closing trend break. I highly doubt this is going to close anywhere back above 108,250 here, but it is possible. If it did by this weekend, then it would avoid the closing trend break, but it's already a swing trend break. So what we have here is a higher high to lower low structure. And what you need to pay attention to, even if Bitcoin was this weekend, to recover, let's say, best case scenario for the bulls, they recover back above 101. They recapture this low by the close of the weekend. They prevent the accelerated downside expansion from the weekly time frame. We're already seeing it on the daily. We've already fulfilled many of the targets to the downside, including nearly coming in towards this weekly higher low close open at 93.5, right? And but on a trend break, you have to be very aware of this if you're on the bullish side of things. Even if they are going to run things back, let's say, for the sake of argument, let's say they run things back up. Well, it's a lower low. You have to be aware of a lower high trend reversal setup. And, I'm just giving an example running back to the upper first, right? Somewhere around 120 to 121. Get a lot of shorts out, right around, the close open highs here. Grab a lot of liquidity and then go lower high. Well, that would be your trend reversal setup. And the confirmation would be back below wherever this low comes in, right? That would be your trend shift into a downtrend. And the lower high would be the trend reversal, whether it comes in all the way up there or if it comes in like a rejection over here. Doesn't really matter. That's your trend reversal setup. And then the confirmation of a trend change is going to be any closes below wherever a low is going to come in, whether it's here or lower. It doesn't really matter. Like it could come in all the way down here. It doesn't really matter. It's all about the next move up, whether it be on a swing or a close. Also have to be aware of moves up that swing the highs but fail to close above, right? Maybe you're getting higher highs that fail to close above and then put in lower highs as it relates to this last high. So in order for the bulls to turn things around, what they would have to do from here, no matter where this low comes in, but let's just speculate and say like, oh, maybe it's like right here, right around this major weekly, and they go up and make a higher high. They would have to come back down and create a higher low or equal low as it relates to wherever this low may potentially come in, whether it's here or lower. And this is something that I've been warning about for quite some time, right? Now the bulls still have a chance. They have until Sunday, right? So there is a lot of ifs. If they can recapture at minimum, because the criteria for downside expansion is close below the lower second while breaching support. And in this case, it would be the swing. Yes, it would still get expansion below the lower second, but it'd be expansion into and through support with downside targets already hit. But at minimum, 98 to 25 on spot. Preferably for the bulls, they want to see a close back above 101, which is the close open higher low here. And then it's all overhead resistance up here. And that's where we could potentially evaluate bounces. So what would that look like? Well, let's go ahead and actually turn this off because I've already actually made this a little bit more complex of a chart. But we have, we'll turn on the fib retracements here for macro timeframes. And I want you to note a few things here that I'm going to point out. Right, so we've got direct prior trend overhead resistance now. And then, of course, we have the highs over here. So you can't ignore these highs over here. This is a big, big zone above the 101 area, right? There's the 102.5. There's, 104.5 or 104.450. There's the swing highs here at 108.4, 109.360, close at 109, close at 112. Of course, the 107 to 108 area. And then that's not even counting some of the close open structure locally over here, at around 116, 115, 116 on the closes. And then, of course, you've got the actual highs up here around 119. And then, of course, 123, 124 and 126. So it's all overhead resistance. And there's a lot of structural overhead resistance, and of course now higher low and higher high resistance overhead that the bulls would have to push through and run through. So got to give it time for structure to develop. I wouldn't be shocked at a bounce from some of these areas that were just hit locally. I also wouldn't be shocked to see Bitcoin come down and tag the 93.5 weekly to the $89,000 low side swing here, where we saw a rejection here right at the 88.7 area. Now, this is confluent with a macro fib extension from the prior cycle, 69 to 15.5 on log scale. And this was a big area, right? This was the 1.168, not 618, but 168. Many of you will remember this from when we were consolidating over here in this range. before breaking down to 74, 420, 69. Well, this would be a pretty big level right in there, right around 89.90 to that 93.5 if we did see price continue down into grab liquidity in this area. Because it's a major fib level. It's also an inflection point for price action on a swing basis, right? Around that 88.7, right? It's at 88.7 or 16.8% above $69,000 gives you 88.7. You can call it 89 if you like. Some are going to pick 90 in that range just because it's a psychological number. There is some dailies that got in and around swing at 90. There's like, what is it? This guy right here, 90,600. And yeah, there's not too much else to be quite honest on spot, but more on derivatives than spot here. So, look, this is a bearish outcome for this and resolution. This is distribution. It's something that we've been talking about for quite a while up here, right? Quite a while. So, but it is only a trend break at this point. This is a trendless structure now because it's an uptrending structure to a trend break. And we have yet to see a low set and then a bounce to a possible lower high or a higher high, right? Like as you get expansion on something like this, coming into major areas of support where we've seen a lot of consolidation and a lot of time spent in certain areas like this, what you could potentially see is you see the bands are widening to both sides, is that things can run it right back to the top side still. But again, it's a little less likely if we're going to see expansion continuation below the lower second and a close by this Sunday below 98,225. What does give me a little bit of pause is we fulfilled a lot of the downside targets, specifically that daily so far at 94 to 96, that point of control that I've been talking about for quite some time, below 98. Well, we've already fulfilled a lot and grabbed a lot of that liquidity. So unless we dip into the weekly, which is very viable, and then come back up fairly quickly and recover 101 and start running back, that's where we can start looking for lower high structure on the daily, weekly, so on and so forth. Or if it starts to break through and run the top side, it totally could just run bottom side of the bands to the top side of the bands, right? Bottom side of the bands to the top side of the bands, right? And then consolidation, continuation, right? So just be aware of that, right? We saw the big expansion from the new all-time high prior to the halving at 73,835. The big drawdown of 49 that's down there somewhere that I'm not going to scroll down to just yet. We saw the expansion up. We saw the consolidation into a compression and then the start of expansion to the downside, right? Just kind of like what we're seeing now, right? Expansion to the downside, rejected a major area, expansion to the downside, goes for one more, right? We already had some wick fishing down and then a giant candle down and then lower high and then boom in. And then we start getting that weekly expansion. It ran from one side of the bands right back to the other and then higher load its way to change the trend for new highs. So be aware that that is a scenario that could play out if you are on the bearish side of things. I know that cycle timing between Q4 and Q1 would tell you that this is most likely the high or the top. We fulfilled my local targets at 125 or 123 to 125 with a swing to 126. So, but you'll notice that I have not called a macro top in Bitcoin. And it's for a few different reasons. One, I need to see more development of structure on the weekly. And then there's a few other things to go along with that. And that would be the, what actually gives me pause here, and I mentioned this in a live stream a little bit earlier, is the monthly compression, right? This is mean reversion to a basis, especially if it comes down to like 89. That's like right around the basis band. It could very easily put in a higher low and then try to run the highs and then fail or something. And then maybe that's the all-time high. Maybe it heads towards our 1414, 28 to $30,000, right? 128 to 130, right? It's a major fib level for me in terms of back testing. And then also it's the basis band. This is a compression. Typically, I don't see expansion to the downside, although, full on bear market, could we get towards that lower second? It would likely be much higher, and then we expand towards like 50. But realistically, it's setting up for like kind of a grindy range that eventually breaks out to the upside above the upper second. And that's primarily based on the fact that we have yet to actually hit expansion for the first time in Bitcoin's history when in a bull market, that it has not hit expansion to the upside on a quarterly time frame, which, of course, does leave the door open for mean reversion and continued compression, right, all the way to 55 and even swings down below, and even deviation closes below on the quarterly time frame, right? But fact of the matter is, we ain't getting expansion on the quarterly to the downside. There's only one way that it's going to expand, and that's to the upside. So could that be full on bear market? Could it take until, this time next year or something to resolve, and it's just a gentler mean reversion on higher term timeframes like the quarterly? Sure. And then, of course, that would have been the macro high for this cycle, and we would start a new cycle after going through a bearish period. But it's compression on a higher term time frame. This all gives me pause because we have not seen anything like this in terms of Bitcoin structure. That's why I said I'm okay being late to the game, calling it the macro high. And one of the things that really is kind of telling is that this is, it's looking like at minimum, it's going to be a doozy of a high. Definitely a major high. On the 2 month, I mean, you just got railroad spikes up here. Last higher low is 60K to that 49 on the 2 month. So, it wouldn't even be breaking structure if it came down and higher load, even making a deviation of trend on the monthly time frame. Like, it could deviate trend on the monthly time frame, and it would still be structurally sound on the 2 month. And of course, the quarterly, this is a 49 to 62 close there. Wouldn't do much unless we saw closes below 49, but it would be, we're likely looking at pretty nasty bearish period on any kind of closes on the quarterly below 62. But I'm just not that convinced, to be honest with you. That's why I'm going to be okay calling it late. I'm okay calling it late. So we hit some of our key levels. I had mentioned and have been mentioning for quite some time, and then even quoted myself as price was dumping out today. Below the weekly, we can look to the POC around 96K with daily zones between 94 and 96. You can split the difference to 95. Weekly closes below 98. We'll target further weekly downside on expansion, however. So, I talked about this, all the way back here, was told BTC wouldn't go under. Oh, this was when it was already hitting that weekly at 98 to 101. But, even prior to that, I think it's just having trouble loading some of the prior tweets. I have some others, but they're closer to kind of price action in this area, all warning about a breakdown. And then, calling out the 94 to 96 and then 93.5 to 89 weekly. So this is full on expansion on the daily. Where would things change? Well, this was the rejection at the weekly 107, right? So let's go ahead and turn on the areas of interest on our top side there. That would be our local 2 up there. In lower term timeframes, this was such a perfect rejection. I think I showed that the other day on Wednesday, but it just perfect price action, but dip into the weekly, started to close in it, swung below it, closed below it. This is expansion on the daily. And you can see that even the lower third on extremes is given that 88.7. It's right at 89,054 bucks down here. Likely a key pivot point if it were to get there. Not saying it will, but likely a key pivot point if it were to get there for sure. But realistically, what are we looking at, right? For the bulls to change things around in their favor. Well, one, excuse me, in lower term timeframes, definitely recover this red zone. preferably the top side at 101, at minimum 98, right? But not, no matter where the low comes in, the last lower high is right in the weekly, which of course is this daily consolidation prior to the breakout that we found the weekly higher low on. And again, we have weekly higher high structure just above it. Need to break that on a closing basis. And that's 107.42, right between the dailies that form that weekly higher low over here, 107.250 to 108.250. Need to close above there and then come back down and hold the low. So essentially, you'd be looking at something like this, and then come back down and, higher low, whether it be here or equal low as it relates to this. Just an example, if this were the low, right, then that would be your trend break to trend reversal setup, and then confirmation be moving through these areas and then starting to target the weeklies here, 112 or 109 to 112 just above, and then start working its way back towards that big rejective area at 116 to 118 up there. Look, bears aren't sweating anywhere, and any upside move that fails to get anywhere close to 120, 121. I can tell you I'm not. So, the bulls really do have their work cut out for them. So now, in lower term time frames, we had a real structural play to our point of control right here, which in the prior range, I do want to show this. In the prior range here, like it is important to understand after there is some dailies inside of that weekly. So there's $92,000, this higher low structure. I wanted to point this out because some of you are fairly new to this, but some of you might know that after the expansion out of the all-time highs at 73,835, the first bearish candle came in right at where essentially where the higher low and the weekly lower high came in, right at this 1.168 or 16.8% above the prior cycle high at 88.7. You can call it 89, right? But if you look at that particular candle, close open right on it essentially. We came up, we formed a high. We came right back down and found support on it, right at that 88.7. And then we came up, made new highs, and then came down and found a higher low. And then this was the higher low close that kind of defined this range between 92 and 89. And then, of course, we have the weekly closing structure over here at 93.5, right? So there is 92 to 89 inside. So there's a daily inside of the 93.5 to 89 weekly. But you see how this price action played out. No closes, wicks all the way in, all the way down to that $89,000. We had the weekly higher low close. We start swinging into it again. Big consolidation around the point of control at $96,000. Dump off, run up. Trump tweet, by the way. That got people very, very long, only to retrace on that Monday. Tried for a higher low, lower high right at failed the 92. Didn't even get to the weekly at 93.5, failing at around that 92.8. Puts in a lower high and then comes down for lower low structure. Fails to pass the actual low and a close. And then got the lower high weekly right at that 1.168 or 16.8% above the prior cycle high, right around 89, right? And that's going to be a key area. So between the weekly at 93.5, the daily at 92, and the $89,000. Those are kind of the next major targets. Anywhere below there, we're looking for 86,000, 85 to 86,000, right? Right around where that weekly close ended up coming in. So you also note that $85,000 is the swing low of that first bearish candle post expansion. So it was a real technical candle that was kind of holding things up, and when it failed. But here's the interesting part. On the way back up, right? So we put in the low front run of the prior highs here. We start chopping around this swing low of the bearish candle. We push up towards what? Oh yeah, that's right. The 1.168, not 618, 168. And then and then we knife right through it and close on the what? The weekly at 93.5. We find support on the daily here at 92. We then get on top of the weekly for closes here, and we keep poking at the bottom side of this consolidation at $96,000 for getting above to 98. Find support on the weekly, and then we start working our way back to the highs over there. So this is a very important area as we scroll over. So that point of control, next major area to look for, 93.5. If you want to take the daily at 92, fair game. Anywhere below there, we're looking to the confluent weekly and daily swing higher low. Well, I mean, this wasn't a higher low, it was a lower low, but it was a higher low on the weekly at 89, where the weekly lower high came in right on that key fib level. So that's lost 86K, upper 80s, 80, 85, 86K is fair game right by the red line there, right? So definitely in the cards. But if the bulls can recover above 98, possibly give themselves a shot at 101, they can prevent full-on confirmed downside expansion with daily targets already hit to the downside. And then we look for possible trend break above 107. Okay. So that's what the bulls need to do. They have to get a trend break above 107.5, but reclaim that weekly at 107 up there. We've seen things, happen very quickly to the downside, and understand they can happen pretty quickly to the upside as well. From the looks of it now in the lower term timeframes, there is potential for a bounce, but it's a weekend, so I don't trust anything on a weekend. 4 hour could potentially bounce, just be aware of lower highs. Where does the 4 hour have to beat? I mean, from here, it's got to get above 104, to even break the downtrend. It's got to set a low first and then break the last lower high at 104. And then it's already got overhead resistances at 100. And then of course the swings at 98 and 99. So be aware. And even if it starts to work its way back up, you've got the low side structure. So we had kind of equal low closes in here for the bulls and the bears. Bulls were trying to hold things up around 101 here on the top side of that weekly. And when it knifed through and closed below this low over here, it was all over. So they have a chance, but downside towards the next weekly at 93.5 to 89 as a bigger zone with the dailies in there around 92 is on the table, like right now this weekend. And bulls need to quickly recover 98 and 101. So the hourly's probably beat all to hell. Yeah, it is. Maybe hourly trend change or trend break rather come in around 97.3 to 350 to 4, depending on your chart. This last lower high, and then maybe it's got a shot at 98, right? But even lower term time frames, this is looking like consolidation, and it could try to swing that weekly. And then we'll see if volume comes in, and then maybe it goes for a trend change from there if that does happen. Yeah, we're getting compression right around that, just below the point of control and right around that weekly. So 93.5 weekly. All right, that's going to do it for me today. Look, I know a lot of people are really upset. Before I go, if you're bullish, just remember when price was running up from these areas, many people were like, oh man, I missed it. I should have bought, or I should have bought more. I'm not saying that this is the time to buy, but my point is the psychology behind price action going up and down. On the way back down, now all of a sudden these prices aren't attractive to anybody anymore, right? Because, oh my God, it could be all over. Well, if that's your frame of mind, understand that you should be picking out levels on your chart that you feel comfortable getting back in and bidding, right? And especially if you're a hodler, if you're going to be buying for long term, right? And you don't blow your whole load right here, right? You don't just ape in all the way at these levels. You ladder yourself in, and you give yourself time, and you expand your time horizon on higher term time frames, and you ignore the noise, right? You just say, I'm comfortable at accumulating at these areas on the way down, right? And if it doesn't hit those, fine. Don't FOMO into that upside, because especially with a trend break on the weekly with a lower low, we could be observing, on the next move up, a possible lower high or equal high that is a trend reversal setup for the weekly that would likely cause a longer term bearish period on the weekly that could extend into the monthly. We don't know. No one really knows. Speculation until we actually get, bull market structural confirmation, right? But we can be well ahead of that with looking at the dailies and weeklies, right? So understand this is a long game for crypto as well. This is just beginning to infiltrate the rest of the world outside of our own echo chambers, and we're going forward, not backwards. So I wouldn't be too concerned, especially if you're in things for the longer term. You should be relishing and cherishing lower prices, because who knows once institutions and governments are all the way. And if we see these types of lower prices, I don't know, and nor does anybody else. Some people think it's going to go to $0 or $30,000. And some people think it's going to millions, and no one really knows. Just go with the flow. But have yourself a wonderful weekend. Don't stress yourself out until Sunday around close. That's going to be at 7 p.m. Eastern, 4 p.m. Pacific. Take a look at the chart. See if it's above or below 98 at minimum. And if it's above 101, you can clap a little golf clap for the bulls. Yep. Thank you, bulls. You managed to stave off expansion on a confirmation while hitting some daily downside targets. Congratulations. Let's try to get a decent bounce out of this. All right. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care. I'll talk to you on Monday.